All right. After a little bit back and forth here, we're a little bit late today with the live stream, but here we go. We are live today with Ryan Butler, US editor, and Jake Evans, managing editor here at iGaming Next. How are you guys doing, first of all?
Good, thanks, Pierre. I'm glad we made it. I didn't think we were going to for a second then, but great to be back on with you, and nice to see Ryan joining us for the first time as well.
It's a beautiful morning here on the eastern seaboard of the U.S. So happy to be here as well.
Amazing. So thank you guys so much for joining us today. We're gonna have a little bit split this hour today between two departments. So in the beginning, we're gonna focus a little bit more on the US side of the pond, and that's why we are really happy to have Ryan here, obviously from a US perspective, discussing. We're gonna talk about like startup disruptor landscape at the moment. So we're gonna focus on a couple of opportunities on the startup front based in the US, and then we're gonna move on and talk a little bit just about the current US state of play. I get very much the feeling that kind of the dust is somewhat settling on the US market to some extent. We are starting to see winners and losers emerging, trends appearing, and at the same time, we still have a lot of regulatory questions ahead of us, a lot of markets that are up in the air, and obviously it's in the middle of the Q2 reporting season, and so we're going to kind of group together that discussion into one point today. So really excited to have Ryan contributing to these two topics today, and then me and Jake are going to continue in the second part of the show today, which is on the Entain Q2 22 earnings that was released today, followed by Catena Media, who is looking to turn their back against Europe, focusing on the US and other emerging markets instead. So as always here, we have a action-packed hour ahead of us here today. But let's jump straight into this startup disruptor special here. And Jake, if I kind of leave it over to you, you had this idea today to talk about a couple of different organizations. Do you want to start this point today and introduce this topic to the audience?
Yeah, happily. I think it's just an interesting time in the US market. Like, obviously, a lot of the column inches to date have been kind of devoted to the big players in the space and the market leaders. Your DraftKings, FanDuel, etc. But it's interesting to me to see some startup businesses that are getting some pretty hefty funding now try and enter the space and kind of turn it on its head a little bit, and do something new and innovative that's maybe been kind of missing from the product portfolios of those that are in the space already. Obviously, the one that grabbed the majority of headlines this week was Better, which is a brand new business. So I'd not heard of them until they launched. And obviously, they've launched alongside Jake Paul, who's a kind of, well, I'm sure everybody knows who Jake Paul is by now. Controversial online media influencer, billionaire, frat boy, something or other. But yeah, he's kind of a little bit similar to Dave Portnoy, isn't he, Ryan, at Penn and Barstool, in that they can really sort of lean on his online audience and kind of legions of followers to hopefully attract some customers into this business. And they've started to do that already using his kind of crazy social media following. So he's got 4.4 million followers on Twitter, and he's not stopped tweeting about Better since the news broke earlier this week. And I think yesterday, one of his tweets said, "I'm bored, so I'm giving away this brand new Corvette," which is obviously an amazing US sports car. He said, "All you have to do to win is follow Better, retweet this post, and tag 3 friends." And that's got like 23,000 retweets on it. So you can see they're going after this kind of low-cost acquisition strategy using social media to get all the benefits from that. And they've just made quite a big impact in a short space of time, I would say.
Definitely. And Darren Ravel, who is his influencer in a very different form here in the US, has tweeted about this too, and just how much that it's just jumped, just huge social media following already, solely from Jake Paul and all the promotion with it. So yeah, it's definitely a content strategy that has been used in the US here a couple times, Barstool, as you mentioned, and all that. So we'll see. I think it's more interesting is how does this tie into the larger aspect of the industry overall? Is this now going to be a pivot away from the established books, DraftKings, FanDuel, BetMGM, Caesars, which have 80+% US market share? And now how do these new companies come in? Is this social media presence, is that enough to really disrupt what has been sort of a quadopoly in the US that's dominated it, on top of a couple of other things, Barstool, a couple other companies that have single digit market share? Can a simple bet, can they jump in? So that's an interesting aspect with it as well. As we talk, is this enough with it? And then two, the idea of what exactly Jake Paul and what exactly is better. And it's this idea of micro betting, this idea of smaller bets. How many free throws is someone going to get? How many yards rushing is a football player going to get? How many hits or how many pitches is someone going to throw in a baseball game? There's a lot of talk and momentum that this might be the future of sports betting, specifically in the US. And here's that first step with it, and we got obviously some big names behind it, and we're just going to see, does this micro betting have a macro level change in the US betting environment?
Yeah, it's interesting, Ryan, what you mentioned, and this product that was created by Joe Levy, which this operator is based on, SimpleBet. This B2B product is very tailored for the US market specifically, right? Because the uniqueness about many of the popular American sports is that they have this kind of like foundation of a lot of start and stop elements, which we don't have in, say, soccer, for example, on the European side, and other popular European sports, whereas American football, baseball, basketball is very much based on this start and stop. And this presents a really unique opportunity for these kind of micro bets that happens very much in the moment. So as an example here, how the simple bet product looks like, it's something like this here. So for those you guys who are only listening, what you're seeing is basically a very simple opportunity to place a bet on this particular basketball player, what type of a basket he will make in his next throw. Will it be a 2-pointer, 3-pointer, or a free throw? And you can bet very much then and there on this very, very simple opportunity. And they're also leveraging the fact that really and truly on the European side, if you go into any traditional European sportsbook, you are met with a very complex spreadsheet, more or less, like a very advanced spreadsheet, and it's pretty daunting for the typical recreational player to sign up to, say, Bet365 and understand how to place a bet. It's not easy. Whereas the thought behind SimpleBet is a lot on simplification. Go back to those first principles. Your 70-year-old grandmother should be able to place a bet through SimpleBet. That's kind of the idea here, right? Whereas on Bet365, you have to be a pretty advanced, purposeful player in order to actually use the product. Something along those lines.
Yeah, and it caters very well to the American audience for baseball, which professional baseball has been around for 125 plus years, and we still debate players from all these different eras, and it's all based off statistics. There is so much that goes into baseball, and you can look into it, just thousands of ways of slicing, did the guy hit the ball or not, and how we look at it with it. In fantasy football, which is really much of the reason why the NFL is far and away so popular, is because people who otherwise don't even watch sports or watch football play fantasy football. Almost every office in America has some sort of fantasy football league. I'm in 3 or 4. Everyone's group of friends has it. And it all ties into these very statistically oriented ways of interpreting sports. And so this makes sense for SimpleBet. Plus, adding on it, that's a great screenshot there, the Kawhi Leonard next basket. It's very easy to look at that and go, okay, there's one of 3 options here. That's pretty straightforward. Whereas, yeah, if you look at it's something else up here, and Jake, that we've seen. I think some part of the reason why some of the European operators have struggled in the U.S. is because of their interfaces, which are very, very, makes sense because people are familiar with them overseas. But in the U.S. here, we're still kind of learning. We still need that little push, that easiest way to looking into it. We're still trying to explain to people point spreads. Of course, it's America, where we like to have our own system for everything. We use our own, where an even money is plus 100. Bet. What does that mean? And what do you have if the odds are minus 150? How do you have to wager to win back your money? It just the confusing aspect of trying to it's hard for people to understand that. So again, tying this in, you have a statistically oriented fan base to begin with, and then you have an interface that is very easy to use. Again, simple bet. Plus, you now have these big, influencers promoting these as well. It makes sense that there is some momentum here, and we've seen some of that too with the funding and just the attention it's getting, and people like ourselves on this show.
Yeah, I think it's probably worth pointing out that micro betting, as a concept, isn't a new thing. Like, not even in the US. I think DraftKings has certainly experimented with it, and they've also kind of partnered up with Simplebet, Joey Levy's company, in the past. But what Better are doing are kind of putting this right at the front and center of the product portfolio, and kind of using that as a bit of a unique selling point. Like you said, you don't have to go hunting past all these kind of difficult interfaces to find it. You log into the app and it's right there. And I think it's also been tried in Europe. I remember 5 or 6 years ago there was a company called Bookie, and that kind of described itself as the Tinder of betting. And you download the app and it would showcase you a bet, say, I don't know, Luis Suarez to score the next goal, and you'd simply tick yes, I want to bet, or no, I don't want to bet, show me the next offering. And that's kind of the instantaneous play that Better's trying to kind of carve out a niche in. I think what's especially fascinating for me is that we're only 4 years in following the repeal of PASPA, and already these kind of market leaders are being treated a little bit like legacy companies that aren't up to date with the latest fashions. And you can sort of see why. Jake Paul said this is the TikTokification of betting, or whatever he said in the quote. And I think that's going to be the key for them, is whether they can properly resonate with this new demographic of younger people who are going to start getting more into sports betting once kind of the education catches up. A lot of experts have said product is the key and product will win out. But is that going to be as important to the audience that Better is targeting? I'm not so sure.
Yeah. On that point, I think it does force some of these quote unquote legacy operators to look at that as well. We've seen with DraftKings and FanDuel and all that, they have expanded as they look for more and more single game parlay options. They've also expanded their betting options. And the key to a single game parlay isn't not just combining spread and then total. It's combining the thousands of the little parts of that as well. So I think if anything, it's too early to tell, obviously, if a smaller company can kind of really make a big impact or a big dent on the overall market. But I think it does force a lot of these companies to maybe reevaluate how do they market themselves, how do they present themselves, what type of bets are they offering.
Absolutely. As we are talking here, I'm trying to find the Bookie the Bookie app that you're talking about to no avail so far, Jake. Yeah, but
I don't think they stood the test of time.
Yeah, they didn't stand that, but it's
people
interesting
left
because
on them.
Yeah, it's interesting because obviously it has been tried and tested this strategy in the past, and it didn't seem at that time, at least for the European market, that it's actually that is stuck with the players, and that's always the question mark when you try to launch a new product, right? Is it going to stick with the players, or is it a novelty that is fun the first week, but it has a high churn rate, and you don't know until you try it, right? So obviously for the European side, it didn't seem to be a product that stuck with the market. So it will be interesting, but nonetheless, this product has already been rolled out, as we spoke about, and DraftKings has already integrated into their operations. So it will be interesting to see. Another point I wanted to raise is just the partnership itself here with Jake Paul, and before going into this point, I just want to point out here that I much prefer the iGaming Next Jake to the better Jake. But nonetheless, we are starting to see a trend here emerging, right, with the highly successful partnership between Drake and Stake, right? And similarly, you have an influencer like Jake Paul, who is really able to move people in the one direction. And we pointed out here in the beginning, social media accounts of Butler, the YouTube account, which hasn't uploaded a single video yet of Butler, has 2.4 million subscribers. Yeah, 2.4. And they have not uploaded their first video yet, right? And that just speaks volume of how Jake Paul is able to move people.
Yeah.
Right. And just hint here, Jake Evans, I'm expecting similar numbers here on the YouTube channel for iGaming Next.
I'm not sure my 1,000 Twitter followers can have as much influence, unfortunately.
Fair enough. But nonetheless, it seems to be an emerging trend to use these true influencers in the iGaming industry in order to move people into your product. And it will be interesting to see when Butler launches, if Jake Paul is able to move people into actual active customers rather than followers on social media, which is obviously his forte. I don't know if you have any thoughts on this.
And that's also, they're not even a regulated business yet. It's worth saying they're launching free to play to begin with because that's much easier. But are they going to meet regulatory hurdles further down the line? Jake Paul's got a colourful past, shall we say. Some of his, online YouTube and TikTok content isn't particularly tasteful, and we've seen Dave Portnoy create similar negative headlines for Barstool, and it can serve to be a bit of a distraction, as well as a really successful acquisition strategy. But yeah, I think it's probably a wait and see because they're not even regulated in the state yet for real money sports betting. But as long as it's free to play, I think it's going to take off, as we've seen. I think it's going to fly in the early stages.
I'll also add too for this, and Portnoy has the same thing, is that the way that these are structured, these relationships and these ownership stakes, however they put them, they make sure that so a Portnoy or a Paul or whoever is not actually, usually what the term is key employee. They're able to structure around it. So even if the regulatory body found that person disqualifying, they actually aren't, sort of applying for the license. Kind of a little bit related here, but Dan Snyder, for example, it's interesting. Dan Snyder is the owner of the Washington Commanders football team, who has also been in controversy. He is currently evading a subpoena from Congress. They want him to testify about a toxic workplace and sexual harassment issues with the franchise. It's interesting in Maryland, he just is going in as the sole licensee, which is, they decided that there was nothing wrong with him. They investigated him. Anyway, just tying in with it, it's these people, I think these high profile figures, they make sure that no matter what, they aren't going to be the ones to deny them a license. They find carve outs or they find ways around it. So I don't see it. I think the bigger question is, again, how does the key question is exactly what Jake said. How does social media following, does that lead to dollars? We just don't quite know yet. Barstool obviously has gotten a lot of attention and all that, but it's a relative market share afterthought. Now there's a lot of reasons why, but they haven't dominated. They're probably 5th or 6th or 7th in the U.S. Is Jake Paul enough? And maybe a good interest? Is it product? I don't know. Just a lot of good questions here.
They're not going to be high stakes customers, though, are they? Like this customer,
they can't be, right?
They're not going to be. They're not going to be VIPs, high stake customers. They're going to be, young guys, probably just out of college of a betting age, who don't have a huge amount of dispensable income. I'm generalizing there, but that's probably what I would imagine the target audience to be.
And it's a key point as well. If these simple bets, every bet's going to be $5 because it's so ridiculous. There's no way to handicap. It's like playing a slot machine essentially, which is a whole other big level issue with it. But that example, Kawhi Leonard, no one knows if he's going to shoot a 3 or a 2 or a free throw. There's just no way to possibly realistically handicap that. So, it's just the dollars are going to be less, in that respect as well. So it's all part of the question. But there's a lot of money in sports betting. It's just, what are your goals? How does it work? Just if we could go on and on about the speculation with it, it's an interesting time.
Speak for yourself here, Ryan. I have a bulletproof system myself, I can't
Please
talk
share
too
it.
much
Yeah,
about it. But
we'll talk that offline. Don't let everyone else know.
Exactly. So guys, moving on here on the Startup Disruptor special, we talked about Butler and Jake Paul here. Another interesting movements on Jeremy Levine's Underdog Fantasy that we were hosting during iGaming Next in New York is that he's been able to close a new round of funding of $30 million against a valuation of $485 million. If I'm not mistaken, it is the same or very similar or slightly lower valuation than the last time around he closed a valuation. I can fact check myself here actually, but it just goes to show again that the markets have obviously come down since about a year ago when he closed the last round of funding here. But nonetheless, $30 million in fresh capital. Underdog Fantasy is a DFS. They are looking to launch online sports betting and pivot into online sports betting, similar to what DraftKings did a number of years ago. What would be your thoughts on Underdog Fantasy here? We had some quite interesting speculation, but I want to start off by asking you guys, what's your analysis of Underdog? What will they do different? How will they grab market share in such a difficult market?
Yeah, that's something that I struggle with them. Again, they have assembled a great roster of talent recently. A lot of people that I've gotten to know in the industry. They've obviously, solid evaluation. They obviously are still getting more money coming into them. There's a lot of interest. A growing number of people are playing them. Again, this is really, DFS is now about 10 years old. DraftKings and FanDuel, which are still the two biggest DFS players, and they almost are sort of legacy as well. More and more people I talk to who are outside the industry are playing Underdog in the US. It's gotten a bit more of a brand recognition and momentum and all that. But the biggest problem, is how do you now crack into that top US echelon? And maybe that's not what they're trying to do. Maybe they're trying to be that next rung down with it. But it's hard 4 years plus later to try to jump in. Their first target is going to be Ohio. That is, for a US audience, it's a pretty big state, really good sports teams. That's there's there, but even in Ohio, they're going against 20 plus other companies, including DraftKings, FanDuel, Caesars. There's a company called BetJack, which is based in Ohio, which has already been marketing aggressively. Bet365, obviously major European player, is going in there. Fanatics, which is going in there as well, is launching their sportsbook in Ohio. So there's a lot of confidence that Underdog is going to do it. I'm not exactly sure how they stand out or how they're looking at it, but all I can say is that they have the talent and they have the momentum that, I can see why they're confident. Reality is it's going to be a hard uphill battle to gain market share in the US, just where things stand right now.
Yeah.
And Jake, what's your thoughts on your side? You wrote an article recently.
Yeah, I think they were back in the news this week because they're hiring for a director of trading and risk. So they are obviously making sports betting a priority, and I think a large portion of that 30 million funding is probably going to be used to kind of bring the right people into the business from a trading, the bread and butter sports betting roles that they're obviously lacking due to their fantasy background. I think the most likely thing that's going to happen is a sale, right? I think they're probably going to be bought by one of those companies we've already discussed, either as a kind of investor play that these larger companies are willing to expand into kind of more innovative, interesting verticals like DFS and free to play. But yeah, if they were to make a go of it alone, I think it would be difficult. But they said in New York, didn't they? They said that, there's 55 brands out there trying to do the same thing as FanDuel and DraftKings, and I don't think any of them will succeed in playing that game. So they kind of dug themselves a bit of a grave there, but they did say, we're going to try and do things differently as we kind of consider ourselves a game studio in a betting environment rather than a sports book. I'm not sure how much they elaborated on that, but obviously big ambitions, and getting the right people into the business is going to be key if they are to make any kind of impact in real money sports betting.
And Jake, just on that too, seeing a lot of rumors as well. It's interesting, DraftKings and FanDuel obviously still have the DFS and then the databases and all that comes with it. Bally's acquired Monkey Knife Fight, which was really becoming one of the biggest, a really big player in the U.S. I would have argued anecdotally, they were the third most popular daily fantasy site. People were really interested in them. And I think maybe there's a lot of rumors, again, clarify that very much rumors here, but maybe what if a BetMGM, which doesn't have that same DFS presence, does it? Or what about a Caesars, which also doesn't have a DFS presence? Company with deep pockets that might want to, continue to supplement what's going on with them too. So that's a distinct possibility. Honestly, and again, at a higher level, and this is time for another show, we are going to see consolidation. It's just inevitable. There's just no way. Again, in Ohio, which is launching January 1st, we're going to see 20 plus sports books go live in Ohio. 2 or 3 years from now, are we going to have 20 plus sports books in Ohio? Probably not. It's consolidation is inevitable, or companies that have fallen off. Twin Spires, which is owned by Churchill Downs. We thought that might be a market leader when it first opened, and they have just completely withdrawn from the digital sports space entirely. We can talk a little bit about Massachusetts and WinBet. They're going to go live there, but they have dramatically backed down their ambitions. It's just these things are inevitable with it, and maybe Underdog does have values to itself in one way or another. Now, does it seem maybe at this point it would be more valuable as part of a larger company? I could absolutely see what Jake is saying there.
Yeah, you're in good company, guys, when it comes to predicting that there might be a sale upcoming here. Obviously, Chris Krafik of Eilers & Kirk is he's speculating here as well to like who would buy Underdog and why, and like you guys, he is pointing out BetMGM specifically here as an acquisition funnel to be able to generate players from the DFS landscape into active online sports bettors, differentiation potential, and ability to play in the B2C alt gambling space. A joint venture structure of BetMGM could make a transition awkward, but I still like it, says Chris. And but then he follows up with, and I'm not that conspiratorial as a person, but I like really interesting outside of the box theories. And Chris follows up here with a tweet, and he says, and more interestingly, but less plausible, maybe MGM buys Underdog, relaunches online sports betting via Underdog technology, and then online casino via Leo Vegas, and exits the BetMGM joint venture with that is currently existing together with Entain. So he puts this theory here that this could be a way out for BetMGM in order to control their own future by launching sports betting under Underdog and online casino under Leo Vegas. And like I said, it's fun to speculate. It's fun to think a bit outside of the box. So kudos to Chris for daring to think a little bit outside of the box. Do you think this would be a plausible scenario? What would be the biggest challenge to this? What do you think, Ryan?
I mean, it's possible. It's just unlikely. I think it's far more likely that BetMGM eventually buys the other half of BetMGM. MGM, it's again, for a lot of people don't realize, it's Entain, which is for our American audience, is a European gaming giant. They split BetMGM costs and revenues and everything 50-50 down the middle. And so BetMGM MGM has tried to get that other 50% share and take it over. I still feel that's more likely than some sort of exit / kind of rebuild from scratch and all that. And plus, starting over with Underdog's tech it's not an easy thing to do. It's an important part of it. We don't talk enough about it. I don't think people realize, but the tech integration process takes years. It's incredibly complex and difficult. DraftKings did it with a company called SB Tech that took 2 or 3 years. Right now, we are seeing that with Penn Entertainment, formerly Penn National, and The Score. Much of their reason for buying them was for their own in-house technology. The Score is using this in-house technology in Ontario and Canada. It's going to take another year by their estimates to convert it over to Barstool in the US. So it's easier said than done. There's a lot of benefit to that 50-50 Entain thing, and Jake's going to talk later about Entain, what's going on with them. But it's a good symbiotic relationship where in the US, no one knows what Entain is, but everyone knows what MGM is. So you get that branding, plus then you get Entain's technology, their experience, their reputation as a bookmaker. So in the US, it makes a lot of sense to keep that going. And again, if anything, it's MGM decides we're going to do everything in house and we're going to take over our share of that and all. So no, the long answer, but I got it.
All right. You can put the analyst's thoughts to rest here, and unfortunately, we put this a bit colorful theory aside for now, at least. But who knows? Who knows? I remember we speculated, we found out Sound's big move was going to be to buy Evolution. I mean, that obviously did not come true so far, at least. But who knows? A boy can dream here, and you never know what's going to happen tomorrow. But guys, it's we are half an hour into the live stream, and it's like normal here. We're having a good time and so on, but we have covered one topic out of 4 so far. So I'm gonna take the lead. Yeah, I'm gonna take the lead here and take us into the second point today. And I'd like to talk a little bit about the US current state of play at the moment, because we are seeing a lot of movement in the last couple of weeks. Obviously, it's reporting season, it's earnings season, so we are starting to see more of the big operators disclosing their numbers. We are starting to see trends appearing. Obviously, there's movements in a couple of the states, and so just as a big opening to this question, Ryan, as well, like, as you see it, what is the current state of play in the United States? And when you look at the reported numbers from, say, DraftKings, BetMGM, Win, and others, are you starting to see winners and losers emerging?
Yeah, well, and again, it's what we've talked on throughout this episode here. It's a market dominated by the 4 largest players: FanDuel, DraftKings, BetMGM, and Caesars, 80+% market share, and then particularly. One of the biggest trends is FanDuel has just done so well. Their revenue is we look at handle a lot, but their revenue is just dominant. And then we see New York is actually a really helpful reporting state. They report every week. And FanDuel, in a 9-operator market in New York, the largest market, they are getting more revenue weekly than the other 8 operators combined. And that includes BetMGM, Caesars, and DraftKings. They have just done phenomenally well. So
different level.
Yeah, and it's really to most Americans' minds, FanDuel and DraftKings are almost interchangeable. FanDuel has just done so much better on just a revenue perspective. Now, like everyone else, they're still losing a lot of money. The DraftKings stock went up recently because they said that we're only going to lose between about $600 and $700 million this year. That was really welcome news to investors. We're seeing kind of similar type things with that. Everyone's a little bit different in how they calculate it. Again, MGM is 50-50. So when we report their losses, they're actually only burdening half of them. The other half is going to Entain in Europe. But it's, the spend is tremendous there. One of the macro level things we're looking at, though, is most of the companies are pointing towards profitability for sports betting and iGaming in fall 2023, which is football season. So maybe fourth quarter, which is football season, far and away the most lucrative time of the year for sports books. So they are trying to, again, be profitable. Part of that is just the pressure they're getting from shareholders, because these numbers just look so ridiculous when they're seeing these massive drops overall. So MGM and Caesars, 2 obviously major casino operators in the US, are seeing phenomenal success in Las Vegas. Las Vegas is breaking records all over the place. People are back in the US. We're traveling again. We're excited. COVID restrictions are done. So the year over year, especially, is just, eye-popping, just huge record revenues. But then you look at the lines, the digital, the online gaming part is just still hemorrhaging money, and people are going, what is going on here with this? So there's more pressure towards it. They believe that they're going to be profitable. They're moving towards it, and part of that will be kind of curtailing the advertising, which has been all over the place in the US. And as well as these really crazy free bets. Caesars, for example, in New York was doing $3,000 first time free bet, risk-free bet, which you could easily, you and your friend could go to New York, bet opposite sides of the game. One of you is walking away with a little under $3,000, no matter what, split that and you have a free trip to New York. So anyway, just all of that is kind of we're coming to earth a little bit at this point now. Again, as we talked about earlier, are there going to be these disruptors that could come in? Could it be an Underdog? Could it be a Better? Could it be Fanatics? Could it be Bet365? We'll see. If that's that next wave here. But for now, we are seeing these U.S. companies trying to get their spending under control, pointing towards a little bit of profitability ideally, but again, still dominated by just a handful of really big players.
Yeah, it's interesting. And when it comes to looking at the states on their own, obviously Massachusetts is now seem to be going live by the end of the year. Is that correct, Ryan?
Oh, we're hoping. Yeah, the big one was Massachusetts the bill was signed into law by their governor, so allowing it to take place. Now, again, regulators are estimating 3 to 6 months at this moment right now, which is still actually be a pretty quick turnaround from bill signing to first bet. The average is about 6 to 9 months. Now, Massachusetts has been preparing for this for a while. They're usually on top of the game. They have a very good regulatory body, but it's possible we see by the end of the year. I think their biggest goal would be something that big target would be before the Super Bowl, which is of one game is the single most bet upon event. That's in mid-February this year. And then if not, March Madness, which is is a month-long basketball tournament. That is the two big events that they would obviously try to target for if they do not get the NFL regular season, which is obviously big in itself. So that's really good news there too. Ohio, which we talked about earlier, is set for January 1st, 2023. They're going to go live. Kansas, a smaller state, but still one with a really strong, passionate fan base. They are poised probably by the end of the year. And those are going to be, some of the big highlights we're looking for at states coming up. But again, Massachusetts and Ohio, big population states, really big fan bases and all that. And plus, again, always floating around is Maryland. They legalized technically in 2021. They are still do not have a timeline yet, but we are, we're hoping they're also maybe the next 3 to 6 months, but it's too early to tell with them additionally.
Absolutely. And it's worth pointing out here as well that at the time of this recording, we are live streaming here on Thursday, the 11th of August. Tomorrow is the reporting day of Butler and FanDuel then, of course. And I will be very curious to see the US number here that FanDuel is going to publish. Is there any expectations on this front? Do we see them? Traditionally, we saw in the last quarterly report is that FanDuel is really closing the gap between their losses and revenue. They are getting closer and closer to that EBITDA positive state. Do we feel that in Q2 that potentially they will close the gap further? We saw obviously WinBet is accelerating their losses in Q2. However, DraftKings are closing the gap. Do we have any expectations on the quarterly report for FanDuel specifically tomorrow?
Yeah, it's hard in Q2. It's the worst time of the calendar in the U.S. sports betting calendar. So it's just really hard to make big inroads then. What I think the biggest takeaway I'd say to anybody watching this, if you're looking for earnings tomorrow, is are we looking at profitability maybe in Q3 or Q4 of 2022, which would be huge. No one has done that. Penn Entertainment is close.
Yeah.
They're getting close to profitability. But they also have a very different business model. They have a lower ceiling, but a higher floor basically, essentially. They don't spend as much money. Their idea is to get, stoolies, there's certain thing. For FanDuel, which is a big spender, for them to be gaining in profitability way ahead of their three closest competitors, BetMGM, Caesars, and DraftKings, that's the big news. So that's what I would look for more. Q2 is always rough for sports books, but if football season, which is very lucrative, August, where we're in right now, is the blitz leading up to the fall, September kickoff. What are we looking there? Are they able to be profitable even with the natural spending increase that comes in August and September? That'd be really interesting. So yeah, I'd look at what are they saying possibly about Q3 and Q4, and are they going to be able to beat their rivals maybe by several quarters, which would be, again, really impressive.
Right. The guidance given so far, I believe, from FanDuel is by the end of the year, they want to be EBITDA positive, whereas DraftKings have given guidance at the end of 2023, if I'm not mistaken. However, DraftKings also talks about if Prop 27 in California is actually enacted and voted through in November, and online sports betting becomes legal in the state of California, then we will have to push that guidance further into the unknown, let's say, because obviously California is the 7th biggest economy on its own in the world, and then we'll see a whole nother level of spend, obviously, if that state would open up. But Ryan, on that note of the California, the latest that I heard, at least, is that it doesn't look that great, at least in the polls right now, for Prop 27. It seems this proposition has a lot of headwind, a lot of powerful organizations, including the tribes, of course, against it, including the local Democrats of California against it as well. Do you have any insights or any expectations? Where are we at right now with the state of California specifically on the referendum later on in the year?
Yeah, the polling is a little misleading at this point. It's the different polls, depending on who you ask and which service is doing it and who's paying for the polls, have influenced things. So it's a little hard at this point. But yes, Pierre, though, to your point, these are all headwind factors that are hurting them. The biggest one, obviously, is the competing mostly tribally backed, retail only, in-person only sports betting ballot measure. So you have that group, which is, again, led by most of the major Native American gaming tribes in California, as well as the horse tracks. They are going up against the statewide mobile component, which is backed by DraftKings, FanDuel, BetMGM, the other books. So that is not only another force financially against it, but also just logistically. People are going to be confused by the ballot measures. They don't know which one is which. One of many things. Yeah, there's a lot of endorsements and stuff like that. As someone who's covered politics for a long time, I'm not as worried about those as much. Those are things that these groups love to flaunt and talk about. And look at us, we have this group for us, and this group doesn't want this one. So, we'll see more and more of those as we lead up to the November election day when ballots have to be submitted. But again, just the logistics of it, where you have a very well-financed tens of millions of dollars are going to go against the online sports betting ballot measure. Plus, you have the confusion of just two competing measures on the same ballot. 26 and 27 are the numbers. It's going to add even more confusion. The way things are being phrased. DraftKings, FanDuel, BetMGM are phrasing this as the solutions to combat homelessness and mental health issues, which is also kind of adds to confusion. Plus, the way in America the ballot measures are written are oftentimes very confusing and worded in convoluted ways. So all of those factors are big concerns. I am always a glass half full person. I'm hoping it can happen. I also know that if it was just a simple yes, no, do you want online sports betting in California, it would pass. The problem is that there's going to be so many different entities that are going to try to confuse that, are going to try to oppose that, are going to try to make it much more difficult than it should be to do it. And people who are much smarter than me, people who know more than I do, are saying that it is unlikely to pass. But again, we'll see. It's way too early, and the sports books themselves have contributed about $100 million, all of them combined, already to this campaign. They're not going to do that if they thought it was hopeless.
Right. Expected to be one of the, if not the most expensive political campaigns in California politics history. That is how much is at stake here. So
it's shaping up to be one of the most expensive campaigns for anything in any state ever. It's unreal.
Unbelievable. Yeah, unbelievable. Interesting, and we'll obviously follow up on this as well. Jake, any final thoughts on you here on the American side of the pond?
No, I think Ryan covered it all really nicely there. To be honest, I'll be looking closely at Flutter and FanDuel tomorrow. And yeah, I think, like you said, Penn was the one that interested me the most out of those that have reported their quarterly figures already, just because of that December Q4 kind of profitability aim that they've put out there in black and white now. So that's another one to monitor.
Oh, wow. Oh. Yes, we are little children in a candy store here, the editorial team of iGaming when it's earnings season. And so with that, I'm going to thank you, Ryan, for coming in here today on the iGaming Weekly News. We are busy bees in the editorial department here, so I'm going to let you go here for today. But thank you so much, Ryan, for all the insights today on the American market.
Of course, guys, glad anytime.
Cracking debut, Ryan.
Now I gotta get to work. My workday has just started here in the US.
Yeah, brilliant. Have a good day ahead, Ryan. Thank you so much.
All right, take care, guys.
All right, so Jake, brilliant first part of the show here today. We are 45 minutes in, like always say, but absolutely brilliant, man. So many good insights to understand the American side better by Ryan. We're very proud, very happy to have him with us, of course.
Mm-hmm.
Now we're gonna jump into to the third topic today, which is the Entain Q2 2022 earnings that was released earlier this morning, and how would you summarize this, Jake? They talk a lot about the new push towards Central and Eastern Europe, and this is now a strategic shift for Entain, and they are seeing this as the next kind of growth opportunity within the company. So more so than a financial update, it is more a strategic update, in my opinion. But how do you see the report here as a starting point?
Yeah, no, I think you're right. So this is Entain reporting their H1s, but obviously we already knew, a fair amount of the financial figures because they'd already done their Q2 report a few weeks ago. So you're right to say that this announcement in particular was prefaced by a new acquisition, which was in the Central European region and was in Croatia. So they've bought the online gambling market leader in Croatia, a company called SuperSport. They're going to pay 600 million up front for that transaction, and it's going to value, like overall with earnouts and everything else, it's going to eventually value SuperSport at 920 million euros. So, this isn't pocket change at all. But I would say, and yeah, they're kind of saying this is going to establish Entain CEE, so it's going to be a kind of springboard for further investment in those kind of Central Europe and Eastern European countries. This is straight out of the Entain playbook and GVC before it. They've got this strategy which Regulus partners sum up best, where they say they go after the local heroes in kind of important strategic markets. We've seen them do this multiple times in the past. Think of Bet City in the Netherlands is obviously a recent one. Crystal Bet in Georgia before. There's plenty others I'm forgetting, but they basically come up with a market or a territory that they want to be strong performing in, and they buy the strongest operator that's currently operating there. This is another example of that.
Absolutely, and I want to bring up on the screen here just kind of the operational logic behind this strategic shift, where basically Entain is talking about how Central and Eastern Europe is a highly attractive growth market with an addressable market of about 5 billion yearly GGR. Entain talks about at the moment that they currently only have a 0.5% market share in the in say the top 10 regulated Central and Eastern European markets here, with Czech Republic being the biggest of these markets. And I suppose part of the logic here is the fact that SuperSport is a local hero, as you point out here, in the Croatian market with, I can't remember, the market share is something like 55%, something along those lines.
54%, yeah.
Yeah, and they are dominating the Croatian market. They've been doing extremely well. They have a high brand recognition amongst the population, and a high average bet. People like the product, people like the brand, and they are now hoping to take this brand and the organization around the brand to lead their kind of invasion, if you will, in the Central and the Eastern European markets here. And something interesting, which Paul Leyland of Regulus talked about, is that it is perhaps difficult to group these markets together. We are talking about the Balkans, we're talking about Eastern Europe, and just to bring the screen forward here again, some of the markets they are listing here: Czech Republic, Romania, Poland, Slovakia, Bosnia, Montenegro, North Macedonia, Serbia, Bulgaria. These are very different markets, and perhaps there is a challenge to go from being this laser focused on one market, which SuperSport is, into convoluting themselves and focusing on 10 markets, let's say. And will they be able? Is it that easy to take this brand and operational know-how, operational excellence, and replicate it into these other markets? question mark if that is going to be so straightforward for Entain. But nonetheless, it's a highly profitable business and a highly skilled team, and the acquisition seems to be making sense here.
Yeah, totally. I think you've said it all there, but Regulus quite rightly pointed out that they're already so dominant in Croatia, this super sport, like you said, with above half market share and a high spend per capita already on their existing customers for that region. It's going to be difficult to really grow the business in Croatia because it effectively can't get that much bigger. But it's whether that, yeah, like you said, they're successful in taking that strategy and rolling it out across those neighbouring countries, sort of, navigating the complexities as they go. Entain has a pretty good track record of doing that anyway across the rest of Europe. You mentioned the Baltics, and they bought N Labs there and have done something similar in that kind of selection of countries around Estonia and a few other places. But just as another rationale for the acquisition, I think it becomes clear when you look at the H1 figures that Entain reported today. If you look at online net gaming revenue by region, the only growth stories were in Australia, which increased 20%, in Brazil, which increased by 38%, and in the US, obviously with BetMGM, which rose 65%. All European countries declined, led by 19% drop in Germany and 15% in the UK. So these kind of mature regulated European markets, we've heard this story 100 times this year and last. It's difficult to report positively, basically because of regulatory headwinds and multiple other reasons. So yeah, they'll be hoping for a bit more growth, and certainly for growth that's easier to come by in Central and Eastern Europe.
Right, and you point out something interesting here, Jake, which is obviously on the screen here we can see the diversification of revenues from Entain, and they are making the argument that they have the most diversified regulated revenue streams in the entire industry. Still, we are seeing 29% of revenues coming from the United Kingdom as the largest piece of the donut here that we're looking at, and obviously it's big question marks on where the UK is heading with the upcoming re-regulation, tighter restrictions, so on and so forth. And so while they are well positioned in terms of the diversification, the biggest piece of the pie, 30%, a third of the entire revenue almost, is still coming from a very, very volatile market. And I would be curious to see how that plays out.
Yeah, and the other thing to note is that retail has had an absolutely ginormous boost year on year because obviously it was closed last year. So retail rose 232% to over 600 million. They're not going to get that sort of monumental gain next year because it wasn't closed during the comparative period, if you see what I mean. And obviously a lot of the UK is dependent on that retail outlet of Ladbrokes and Coral and the land-based shops. So, yeah, I mean, they need to do something, but they've got an amazing operational team, and these kind of acquisitions have been extremely successful for them in the past.
Exactly, and this is something to point out again here. I mentioned in the beginning of this talking point that the quarterly report was very focused on strategy in this time, and the first kind of third of the quarterly report is talking about the operational logic and reasoning for the opportunity that they are now pursuing in Central Eastern Europe. And I would say like the shareholders reacted very positively to the explanation of why they are making this acquisition, what is the strategy and the reasoning behind the decision, and kind of the guidance as we move forward in Central Eastern Europe. And we can see here on the movement on the stock market in the last couple of months, we've seen an uptick of 29%. Today so far, the stock is up it was up 8%, but we are currently at about 6.3% up on the markets as we speak at the moment. And so shareholders are definitely rewarding Entain for this push into this kind of new growth opportunity that is Central and Eastern Europe. But again, it remains to be seen if they are going to be able to execute this strategy now, which is led by the new acquisition of Superbet here, which has been hyper focused on one market, which is now going to spread their wings and fly into 10 markets from one day to the other. So interesting to see on this front. And just as a small update as well, we talked about the EBITDA up 17% year on year. Very strong result as well, considering the loss of the Netherlands, of course, and just a tough comparable in general, where last year we still were in COVID lockdowns and so on, and so it seems to be a quite strong financial quarter for Entain here. And just to bring up,
that was overall underlying a bit there. If you look at just for online, it actually fell by 22%. So again, retail is propping up a lot, a big portion of that.
Right. That's a good point, Jake. Yeah, thanks for clarifying that. Yes, it's a tough comparable to last year. Again, with COVID lockdowns on the online side, but then as you're mentioning, the retail side, on the other hand, is now returning, so an extra boost in the quarter on that front. Interesting stuff. Anything else to mention here on the Entain Q2 22 earnings? Is there perhaps anything on the BetMGM side of the fence that stood out to you, Jake?
Very little in the form of BetMGM. They tend to have a kind of separate reporting day for a US audience. Like I said, US revenue climbed 65% to what was it? Sorry, 608 million for H1. So that's a 65% climb, and they're still guiding to full year net gaming revenue of more than 1.3 billion. I think Entain is a company that's pretty famous for its proprietary technology stack, which is supposed to be one of the best in the industry. But after today, it won't be known for the technology that runs its results service and phone-in center for analysts, because they had to basically cancel the call because of technical malfunctions. So none of the analysts tuning in got to ask any questions. So there'll be a few angry people at Morgan Stanley and elsewhere this afternoon, I'd imagine.
I would imagine so as well. Jake, to wind things off today as well, we were supposed to talk a little bit about Catena Media here and the fact that they are turning their back against Europe. But something else that I realized here under the hour, and it's just worth to mention here, is
Sure.
the press release. It's not really a press release. It's from the American Gaming Association that was released yesterday. I don't know if you have had time to read through the statement that was released by American Gaming Association. If not, it's just worth to mention what it contains. Now, I don't know if you have any insights there or a summary.
Yeah, I can't say I've had a chance to look at this yet. I think other members of our editorial team are looking while we're on air. But it's effectively, they're the trade association in the US, and they're looking to incorporate, or certainly sort of lobby for, crypto payments. Is that right? And blockchain in the casino space, regulated casino space, we should say, which is the all-important word.
Exactly. So essentially, American Gaming Association, which is represented by most of the major players in the US, has proactively asked the federal government in the United States for guidelines regarding how to handle digital assets. This is, in other words, a necessary step for the casinos to feel comfortable to accept crypto. Were they to be able to accept crypto is a massive step, of course, to get closer to crypto gambling and open up a new revenue, open up new good potentials for a different demographic again to enter the mix here again. So a big step from the AGA and the consortium of operators in order to accept crypto. But yes, we will report more on this as we go forward. This is just a story that is developing as we are speaking right now.
I did ask Ryan quickly about this yesterday and his thoughts, and he said He gives the AGA more credit than most others in the industry, but he said this is them jumping on something that they have little to no control over. So they might just be paying lip service favourably to the topic, but hopefully, their opinions does carry some weight, and we do see some progress in that regard.
Absolutely. Jake, as a final point here today, we can keep this last story short, is the fact that Catena Media is now looking to put Europe into the backseat. Let's say potential cuts when it comes to staff in both UK and Malta. They are looking to free up resources in order to give the US, Latin America, and Asia a bit more focus. Obviously, they are struggling with regulatory headwinds here in Europe, which has been made evident in the last quarterly reports. But can you give a little bit more nuance to this story as well?
Yeah, I can try. I think, to be honest with you, it touches on a lot of what we've discussed already from an operator point of view, in that there is next to no growth to be found in mature European markets, and as has been the case for the last year or so. So they've implemented this strategic review, which started, if you remember, a few months ago when we reported that they were looking at selling the Ask Gamblers brand, which is very popular. They said that Ask Gamblers won't be affected as part of this review, but they're still kind of in discussions over a potential sale of that asset. But yeah, basically they want to save 5 million euros in annual and operational costs across the European business, and kind of reinvest them into higher growth territories, whether it be LATAM, so regulating territories really, or North America, where we know affiliates are the companies kind of making the most money right now. But yeah, it's just obviously a huge shame that it's going to potentially lead to job losses for some staff in Malta and UK, because Catena has an incredibly broad portfolio of websites and branded assets, even for an affiliate. So hopefully they can keep kind of casualties to a minimum. Yeah, that's all I'll say on that, really.
Yes, and we're going to end this story with the interpretation of this story by Feda Mekan, who is the Fe in Cafe Rocks, a large affiliate that was acquired by Glitnor Group earlier in the year, a couple of months ago. And Fedan is very vocal on Twitter, and his interpretation of the story is basically that he's writing that, by the way, when Catena writes higher margin opportunities, they mean, except for the craze in the US, we hope for some unregulated gray and black markets to stay as they are. And so that's his interpretation of the strategic initiative of Catena Media. So yeah, that's that basically. And Jake, it's been great to have you with us here on the hour. We managed to fix your robot voice here earlier, and I think we managed to put together a kick-ass hour here, despite a little bit delays today. But for those of you guys who are still with us here, it's been great to have you guys here. Jake, always a pleasure to do this with you, and fantastic to have Ryan with us in these weekly shows as well.
Yeah, thanks for having me, Pierre. And thanks for everybody else for listening as well.
Brilliant. Thank you so much, Jake. Thank you so much, everyone listening in, and we will, as always, see you here next week. Thank you so much.
We are here in New York today at a pivotal time. We are building the future of iGaming.
What are the winners of the iGaming industry in America going to look like in 5 years from now?
We want to get to a point where the platform is able to go beyond what we can humanly comprehend. When we talk about self-learning, that's what we need to do, not anything less than that.
Look forward. What can this technology bring? And then bring that back into the iGaming industry.
Very hard to bet on women when you don't see them, right?
One of the things that I've enjoyed the most about the content is the willingness to rethink the format.
It's been the first thing is what happens to GGR growth when bonuses come down.
Are these businesses going to be profitable? Are the operators going to be profitable? And what's going to make them profitable?
The most important issue moving forward for this industry is RG.
This has been one of the best shows to bring people back post-pandemic as an industry, as friends, as colleagues. All of the events that surround the conference are equally as important. And whether it was the opportunity to be in a suite at the Yankees game, the opportunity to see New York from the 56th floor, or just the opportunity to meet and mingle with folks more at the ground level at dinners and bars, I would have to say that the supporting events around iGaming Next were as good, if not better, than the content itself.
If you're going to have a truly decentralized platform, there has to be people contributing to the front end and the user experience for that.
Regulation can be a very good, strong force, and we want it to be that.
While there is more momentum, while we are moving faster, we should not mistake that with being able to move fast enough to actually get it done.
Let's be honest, that's where the real money is.
The future long-term of this business is astronomical. It has no limits.